Hi, everybody. This is Robert Chadwick with America Mortgages. Thank you for joining us on this webinar. Today, we have a very interesting subject and something that's always asked about is proper property management. And I'm happy that we have Alistar Aunty to join us. Alistair is an expert when it comes to property management in the New York area. So Alistair will be talking about his services and things to do and not to do when it comes to property management and real estate investing. And then after, I will go over the loan programs and what it requires to be able to purchase a property as a non-resident, both foreign national or US expat. And then we will have, as usual, a questions and answer session. Throughout the webinar, there is a chat bot which you can easily access. And on that, we'll have my email, Alistair's email, and also links to schedule an appointment with either one of us. So with that said, Alistair, thank you very much for joining us. I know we've been planning this for a while, so I really appreciate you being able to take the time. Are you currently in New York?
Well, first of all, thank you, Robert. No, I was in New York. I flew back to London the weekend, so it's just gone 9 in the morning here for me, as opposed to just gone 4 in the morning, which you might not have got the best out of me at 4. So no, it's the daylight behind me, and I'm here for a week or two, and then back to New York middle part of November.
Fantastic. So why don't we start, and then again towards the end, if there's any questions, hold off answering, and then we'll do that at the wrap up.
Lovely. Well, thank you very much indeed for that introduction, Rob, and very happy to get going. Hopefully the front page of the slides is up on the screen for everybody, or is just about to be. There we go. Lovely. Thank you. So my plan today is to spend about 20 minutes talking about property sales and property management, the benefits of good property management, the New York City market, and specifically the rental market, a new to market opportunity that clients could purchase based in the Upper West Side, and then finally the purchase process, purchase and ownership costs, and that should lead nicely into talking about financing in the US and New York market. So if we could have the next slide, please, that would be fantastic. So what do we do and how do we help clients? So Bridgewater is a provider of asset management services to international clients who own property in major US cities, primarily New York. And we help clients in 2 main areas. We work with clients directly and also via channel partners in Asia in purchasing property, primarily, as just mentioned, in the New York area, but also in other select US cities. The aim being to always find something specific to the individual client's requirements. Often this will be for an income producing investment property and occasionally as a second home. The other part of our business, which is now the larger part, is managing these properties for our international based clients. I would say that we understand property investment and our management service is aligned with this in mind. We look after our clients' properties with the care and attention as if they are our own. Next slide, please. So how are we a little different to perhaps other management companies? So our niche is international investors. That's who we look after. That's who our entire client base is. So our service is tailored to take care of everything for the client when it comes to leasing and management, and not just certain parts. We don't cherry pick. We're a smaller, more boutique-sized company, and so we look after no more than 50 to 100 owners at any time, and that helps us ensure that we deliver a personal service, and we pride ourselves on our responsiveness. Full service. So we do offer a full service. So we help with everything to do with the acquisition of a property, to recommending working with a trusted attorney, to the successful completion of the property. We also help with obtaining the relevant tax ID numbers. We undertake regular inspection visits. We provide transparent reporting that is sent out by the middle of each month, every month. So every aspect of buying and owning a property is covered. Return on investment for our clients. So here I'd say we have a laser-like focus on keeping vacancy and expenses to a minimum. This helps maximize clients' profitability. An example here would be the benefit of renewing a lease rather than seeking a new tenant and a new lease where possible. An example would be we've taken properties on in the past where an owner has self-managed, or we've taken them also on from poor performing management companies who have over time perhaps become frustrated with a tenant or different tenants. They ask questions that they don't feel they have the answers to or don't want to answer. So they decide at the time when the lease is up that they want a particularly high increase in rent to make up for the perceived bother. In this situation, a good tenant can leave, and this can be costly for landlords, as you then have vacancy costs, turn costs, higher building fees when you have new leases versus renewals. So a good property manager will always work to keep the tenant relationship strong, as this benefits the owner's overall return in the long run. Value add. As a property management company, we have relationships with insurance, accountancy, maintenance, and legal partners, which helps ensure our landlords receive the best service at the fairest prices. Also, within the value add element, I'd highlight the benefits of being a full service provider. Some companies just offer management, some just offer a brokerage service. We don't pick and choose, we can handle everything for our clients. Partnerships. We've been fortunate to be recommended by some of Asia's most well-known companies, like Savills, both in Singapore and Hong Kong. And we reached that level from demonstrating our knowledge and experience to them over the years and our ability to take the very best care of their clients. And the final point on this slide is culture. You may have detected from my accent that I'm not originally from the US, but I understand the occasional different cultural and business nuances and can seamlessly bridge any difference between New York and our international, predominantly Asian-based clients. Also, as our clients have put their trust in us and expect us to deliver, this is our culture, very much service delivery. So the value of property management. So one of the key things is, I would say, is understanding the leasing and renewal market. As within this, it's understanding all of the building requirements, regulations, and forms, as each condominium building in New York will be slightly different. And making sure that when we found a new tenant, that these are all filed, so delays are avoided and issues don't arise before the lease has even begun. Many owners don't see the work that goes on this front as we handle it, without having to involve them too much in it. But it's something that when working in the New York market, it's often very individual and specialized just for New York, but the building requirements and forms are something that are time consuming and have to be filed correctly, as that then minimizes the wait time before you get the green light and the tenant can move into the property. Talking about tenants, doing thorough due diligence on incoming tenants is also crucial. We look at their credit score, the 40 times rent rule. So that would be if the rent is $6,000 a month, for example, then the tenant really should be making $240,000 a year in salary. We'll look at employment references, tax returns, cash in the bank. This helps ensure that with tenants, that the tenants that are being selected, they are well qualified ones. By being extra careful, we can spot the red flags that perhaps others might on occasions miss. The tenant relationship is very, very important. We strive to be responsive and offer a responsive service to tenants. This ensures they remain happy and more willing to renew their lease at the right rent at the end of their initial lease. Normally leases run for a year to start off with. It also ensures that no issues arise which could incur landlords being fined by the buildings, as buildings do have pretty strict rules, and staying on top of all of that just ensures that everything runs very smoothly. Reporting, we send accurate, transparent and timely reporting. And we take pride in ensuring your property asset operates smoothly and our clients have the facts at their fingertips at all times. And I think it's crucial that landlords do have this information to hand. And the final point on this slide, long-term relationships. Something that always strikes me is the time it takes for a buyer to choose and to buy a property is dwarfed by the time that that client owns that property for. And therefore, I think it's crucial to have a trusted property management partner by your side to help ensure the best possible ownership experience year in and year out. Thank you. And this is the last slide on the property management side of things. Good property management can save landlords money from things like vendor management. With many years working with licensed and insured contractors and technicians means we can ensure trustworthy and proven vendors take care of any work required at clients' properties. Using a same phrase as before, value add. Can something be repaired? Does it really need to be replaced? A tenant might think it does, but often repairs can be made, which of course is more cost beneficial. It's also worth being aware of renewal versus releasing building costs. Buildings will generally charge less for lease renewals than they would do for brand new leases. So ultimately, I think good property management and awareness can save landlords money. Knowledge and experience on the ground, from property managers to leasing agents to attorneys who have worked with international clients in the New York market for more than 15 years. We do know the market and we know our way around, I'd like to think. And ultimately, landlord's time is money. We take the stress out of ownership. Our clients don't have to deal with tenant communication and their issues with building matters, figuring out repairs, dealing with property tax queries, or what the best insurance is, etc. We handle this, and this leaves landlords free to focus on work, family, and the things that matter most to them. So New York, part of the reason for the webinar today is to talk a little bit about the New York market and to maybe at the end answer some questions that people may have about the market. But why invest in New York as a market in the US? Well, there are a few things that I think are perhaps more unique to New York, and I've listed them here, and I'll talk a little bit about those. In New York, by and large, and almost exclusively, they're professional grade tenants, the tenants that would rent your property. These tenants, due to the income rent ratio, earn hundreds of thousands of dollars per year. And they work in the main industries in New York City, which are medical, law, media, and finance. They have strong credit, strong references, and good assets. These tenants also tend to take good care of your property, and this also helps ensure maintenance and repair costs stay low. It is a landlord-friendly jurisdiction. There are no rent controls, no rent stabilization, and no good cause eviction for condo owners. One thing just to be aware of is that if you are ever looking to increase rent more than 5% from one year to the next, you just need to provide sufficient notice to your tenants, and that would range, depending on how long they've already lived in your property, from 30 to 60 to 90 days. There are no additional purchase costs for non-residents, and that is a little different from, say, the UK, where there is. So there's the cost of buying just the same as the costs of a local person buying in New York. New York is also the economic center of the US. It is aspirational. People want to move and work there. It's a global leading city, safe, secure, and there is consistent demand. It is also undersupplied. Manhattan is an island. There is a limited supply of property to buy and to rent, and this keeps pricing relatively high. Domestic demand. Local buyers far outnumber international and investor buyers, so there will always be a strong market to sell your property to in the future. There's a world-class education in New York. I won't talk too long about this. I think most people, I'm sure, are aware you have Columbia University, an Ivy League university, and New York University, two of the top universities in the world located in Manhattan. New York and the US in general, perhaps compared to others, is tax-friendly. There is a good number of allowable deductibles. And over the years, this has ensured that our clients have had no income tax to pay on their rental income. And that isn't always going to be the case in other countries that you would invest in. The Manhattan rental market. So I won't talk specifically about the 4 bullet points that are on this slide. I'll let some people read and make note of those. But what I would also say about the rental market in Manhattan is 70% of the millions who call New York City home rent. So there's always strong demand for rental properties. You have apartments that are owned by entities and condominiums that are owned by individuals. So condominiums is generally what we talk about with clients, and they are often finished to a higher standard, and so are the most popular type of rental property. And there's some interesting structural changes that are driving the rental market in New York and Manhattan. The number of 25 to 34-year-olds is increasing, as is the number of those aged 55 and above. Also increasing is the number of those educated to degree level or higher, and those earning over $100,000. And almost all of that 25 to 34 demographic are renters, and that forms a lot of the rental base of the properties that our clients have and rent out. So it's a strong rental market. Thank you. So there's two or three slides like this that don't need too much of an explanation. This one shows the monthly rental price indicators. And if we look at, go from 2010, except during the COVID period, rents in Manhattan have continued to increase. I think this is a good slide and a good comparison as well. This is the New York rental vacancy rates. New York Times reported last year that the vacancy rate was actually 1.4%, which was the lowest vacancy since 1968. That's also documented on the New York City .gov website as well. I've gone with a slightly higher figure of 2%, but if we compare that to other hot cities in the US, like Miami, like Austin, that run at 6 and 7%, 1.5% to 2% is much, much lower. And I think it's worth highlighting that, again, with Manhattan being an island, it is very difficult to build lots more housing. So demand will continually be strong, prices will remain robust, and I suspect it will be hard to find other markets in the US with as low a vacancy rate as Manhattan. The Manhattan rental turnover rate, so less than 5% of tenants vacate per year, again helps ensure that return on investment for landlords remain high, as often many will stay for years. And that should be perhaps a consideration of owning. And again, just to reiterate, it's almost unheard of for a tenant to sign a lease and 1 year later to move out. Most will stay. So it's a good, secure market where tenants, if they receive good service and they're happy with everything, will tend to renew year on. I thought it would be worth highlighting a new building that's just come to market in Manhattan called 720 West End. This is an Emery Roth design building where the original stone base, brick facade and sculptural detailing has been maintained, with a completely new refurbishment from top to bottom internally. And you can see that on the main picture, which is on the top left-hand side. Once everything is fully completed internally, there will be 131 brand new condos over 17 floors, not 70, 17. It's located in the Upper West Side, which has long been one of the most desirable residential neighborhoods. Within 10 minutes, you can reach Columbia University to the north, and to the south to Midtown Manhattan, the Lincoln Center, 57th Street, Billionaires Row, Broadway, and all of the shopping in that location. So very, very handily located. And it's also a short walk both to the east to Central Park and even quicker to the west to the Hudson River Park. That can be seen in the picture on the bottom left. Beautiful space there. There's biking and cycling paths that run right the way along the length of the Hudson River. So you can go north all the way up towards Columbia, and south all the way as far down as the World Trade Center and Battery Park. Given the desirable nature of the Upper West Side and it being a strong established residential neighborhood, this helps generate higher rents than normal. The building itself, as you would expect from a new high-end condo building, offers facilities such as a 24-hour doorman and concierge, on-site private parking, residence lounges, a fitness center, basketball court, and a courtyard garden. And the lobby of the building is the picture on the top right, and on the bottom right is an example interior showcasing the living area and a kitchen behind that. All property in New York is built out and sold without furniture, and generally there is no need to furnish property. The rental market in New York is that the tenant likes to come in the same condition the property is purchased in, so there's generally no need to purchase anything additional, perhaps with the exception of window blinds. So where I believe this development stands out is the combination of location and pricing. There's a lot of larger and older properties in the Upper West Side, but very few newer condominium buildings offering a choice for 1 to 5 bedroom residences. And being brand new to market, there's a good range of 1 bedroom homes priced between $1 to $1.5 million. So I have to make a slight apology here. I was preparing this slide deck a couple of weeks ago, and the property in question has now sold. However, this is an example income and expense spreadsheet, and this would be the same for other properties. The unit number and the price and the size may be slightly different, but this details a simplified and estimated gross and net rental yield for an example property at 720 West End. The 2 fields that I would like to draw your attention to are the 2 fixed landlord costs in the bottom half of this slide. The estimated real estate tax or property tax. This is paid to the New York City Department of Finance for things like parks, schools, trash collection. It's generally calculated that the higher the purchase price, the higher the amount that is due, and this is paid quarterly. The line item below that is the monthly common charge or the maintenance fees. This is paid to the building, and this is for all of the amenities, the building insurance, on-site staff, utilities, things like that. And that fee is paid monthly. My last couple of slides before I hand on to Rob. So the purchase process in New York, it is a straightforward one. Once a client has selected a property, the offer is made, and then the developer will send on to the client via their attorney the purchase agreement. Purchase agreements and the building's offering plan all have to be approved by the New York State Attorney General's office first, so they are fair documents, not one-sided. Once you as a purchaser have made that offer and received the purchase agreement, you would spend around a week just reviewing it with your attorney to make sure you're happy, have any questions answered. At that stage, it would be signed, and electronic signatures are all fine. There's no need anymore for printing and physically returning documents. So that would be e-signed, and at that same time, the initial deposit, which is generally 10%, would be wired, and that is kept in secure escrow. All funds are kept in escrow and are not transferred to the developer until the time the property closes. With properties that have more of a build out to them, 720 West End, for example, won't be completed until mid to late summer next year. A second 10% deposit will be required. That would be in about 6 months' time. Again, that's kept in secure escrow. You can also grant your attorney power of attorney, and that will enable him to complete the property purchase on your behalf in person in New York, so you don't need to attend. And I would strongly recommend doing that, because once we get very close to the completion date, occasionally there can be changes of 2 or 3 days here and there. You really wouldn't want a client traveling all the way in from Asia and then finding the closing date being pushed back 2 or 3 days, and they're back on a plane before the property completes. So power of attorney, very regular and normal way for international clients to complete on the property. And at the time the final paperwork is signed, the balance is sent to escrow as well, and that can be where the mortgage provider would come in and provide the balance of funds for that. So it's a straightforward purchase process. And then my very final slide talks a little bit about purchase costs in New York. From 3.5% of the purchase price at the low end is where costs are. Again, there's no additional stamp duties or anything like that for non-resident or international buyers in New York. The purchase process, the purchase costs are made up of the mansion tax, which starts at 1% of the purchase price, and that is up to $2 million. Once you buy above $2 million, it goes to 1.25%. You have city and state transfer tax, 1.825%. That's up to $3 million. If you buy above 3, it goes up another 0.25%. Title insurance, you probably want to allow about 5% for that. That covers the fee simple element. The condos are freehold in all essence, and that guarantees you the ownership of your property, free and clear title, and your attorney fees are normally about $3,500. And a good broker would be looking to try and negotiate some of those closing costs with the developer. And then very finally, when purchasing with finance, there is a New York mortgage tax that depends a little bit on the purchase price, the loan amount, should I say, and that's about 2% of the loan amount. And I'm hoping, talking about mortgages, that's a nice segue to reintroduce Rob to talk more about the financing side of things. So thank you all for listening.
Thank you, Alistair. Super, super interesting. Maybe you want to go back on camera for a second.
Sorry, Rob. I thought people have had enough of
Yeah, no worries, no worries.
Wanted to give you the full view.
I just wanted to just talk a little bit about what you discussed. I mean, for one thing, I was quite surprised at how low the occupancy rate or the vacancy rate, I should say, is in New York. That's, if you take it, looking at it countrywide, is that probably one of the lowest?
I think it is. I think unless you're drilling down into sort of extreme sort of micro elements of certain neighborhoods and certain cities, I think it has to be one of the lowest vacancy rates across the US. Manhattan, as anyone knows who's been there, it's tight geographically, and there is always demand for property there. It fluctuates a little bit, but I was surprised when I was doing my research for this webinar that it was as low as 1.4%. I'd always seen it sort of hovering at around the 2% mark, which I still think is very, very low. And I think for people that are buying property in New York, that should give them assurance that they know that once they've completed, it will take a very short amount of time to find tenants for them. And should a tenant ever move on for whatever reasons, again, it'll be pretty quick in finding a new tenant for them. So it is a nice sort of level of assurance that there is that robust rental market and a very low level of vacancy.
Yeah, certainly. It's fantastic. And, just for my own, I guess, purposes, if you were to buy a property in New York and you wanted to receive the maximum rental yield possible, what kind of entry point do you think is something for a client to look at? I mean, is it 2 million? Is it 5 million? I mean, where is going to get you the most bang for your buck?
That's a tricky one to answer, Rob, because the market is so wide in Europe. But I think really you should be, if you can, looking at a one-bedroom property. I think that opens up a slightly larger market, and anything one-bedroom to two-bedroom tends to be what I would call the investor sweet spot. So really anywhere between $1 to $2.5 million, you would generally have the combination of a relatively strong yield combined with a strong pool of potential renters. If you're looking at the smaller studios, there's a slightly smaller pool of renters for those. And if you're going into the larger 3, 4, 5 bedroom condos, looking at $20,000+ per month, there's a smaller pool of renters for those. So I would say you're on very safe ground between $1 to $2.5 million, 1 to 2 bedroom properties.
I think that's excellent advice. And I think just to kind of like wrap up what you were talking about, I really do think, and I can say this because this is all we do as well, it's quite undervalued on being an expert on not only doing mortgages for foreign nationals or US expats, but also managing their properties. I mean, understanding everything from things that an average property manager would not consider. You've already been there. You understand it, and this is your business, and this is what you do. So we thank you for that, because you certainly add value to what we're doing on our side. So
no. Thank you for the kind words, Rob. Yeah, I love what I do, and I'm a fairly customer-centric type of person. So providing good service, most importantly to our owners, but also very importantly to tenants. It just makes everything work well and generally happy. And I just think it's the right thing to do. You have happy tenants, you have happy owners, and they make more money from it.
Fantastic. So thank you, Aunty. And at the end, we'll do the question and answer. But
absolutely,
for now,
I will be here. I'll turn my video on. I'll very much be here to help answer questions when you wrap up, Rob. Thank you again.
Okay, fantastic. So thank you again, everybody, for joining. As you're aware, America Mortgages has one focus: providing U.S. mortgage financing for non-U.S. residents. both expats and foreign nationals. So I'll go into the first slide here, if you could. So a general overview of our mortgages. We are very specific, again, in what we do. We can, all of our loans allow for purchase, refinance, and cash out. We also do offer asset-backed lending if you want to qualify based only on the value of the real estate and not either the cash flow of the property or personal income. If you're a foreign national, we can get up to 75% financing in all 50 states. If you're a US expat, we can get up to 80%. What makes the US very, very unique, opposed to, I believe, almost every country in the world, excuse me, there are no age restrictions when it comes to the amortization of the mortgage. So whether you're 19 or 99, you can still take advantage of the longest amortization period possible, which is 30 and in some cases 40 years, which allows you to maximize your rental yield. We have a fantastic program that allows you to have a fixed rate for a 10-year period, but only servicing the interest. After that 10-year period, the loan stays at that same rate, but now you're servicing the principal and interest. Fantastic way to be able to maximize your rental yields. Obviously, we have loan programs in all 50 states. Certainly, New York is readily available. You can qualify only on the rental income of the property if you choose, which means we do not need any personal income documents from you as the borrower. If you choose, we do allow foreign income. So, for example, if you're a US expat and you earn foreign income, as you know, most banks will not accept this. We have no issues. We treat it just as if you're living and working in the US, but we do not require a W-2. So if you are a borrower and you are a non-US citizen or US expat living overseas, we can absolutely assist you. No US credit or residency is required for a foreign national. A US expat should maintain US credit, but in the event that they've been away for many years, we do have loan programs for them as well. But what's also important is we have no AUM required, meaning that we are all dry lending. So there is no requirement for you to open a bank account with a certain or a specific amount of money during the loan period. Absolutely fantastic way. We want you to use your money the way you should use your money and not having to leave it in the bank. The loan process itself, once you complete all of the paperwork, and we have a very easy to use portal that you or your clients can complete the information and upload documents securely. Normally, we can do a loan approval within 24 hours, but we say up to 72 hours to be safe. We issue a loan approval letter. Once you have that letter, you can go shopping. Our average closing is 30 to 45 days. And of course, there's no need to travel to the US. Normally, you can sign any closing documents in the country that you either hold your passport in or you're living in. And one thing that we are very, very proud of is 97% of our loan applications are approved. If they're not approved, it's normally something property related and not the mortgage structure. So again, if you are living in Asia or you're living in Europe, wherever it may be, we have loan officers that are working 24 hours a day, 7 days a week, in a variety of countries and speak a variety of languages. So we make sure, just like Alistair was talking, how they specialize in property management for foreigners or non-residents, we do the same when it comes to mortgages. Next slide, please. So I'll go over our loan programs, probably take the next 5 minutes, and then we'll have the question and answer. And please remember, within the chat, there is a link to schedule a time to speak with one of the loan officers, to email me directly if you choose, or also email Alistair. So our most popular loan program is a loan that qualifies on the cash flow of the property only. And if you think about it, this is absolutely common sense underwriting. The average closing time is anywhere from 30 to 45 days. And again, with all of our loan programs, there's no US credit, residency, or even a US footprint required. Now, the fact that you're not providing any personal income documents, how do we qualify the loan? Well, we also order a supplement. That supplement, much like reviewing of the value of the property, also reviews the rent that the property should be able to generate. We use that as the income to qualify for the property. It's very common sense underwriting, and it absolutely works. So if you're, as an example, if you look at the bottom, the gross rental income for the property is $2,400. Your mortgage payment, which includes your principal, your taxes, and insurance, is $2,400. The loan qualifies. We can go all the way down to a minimum loan amount of $100,000 on this program and up to $3 million. And these are obviously 30-year fixes, regardless of age, with an interest-only option available. So an absolutely fantastic loan program. We've made it to really anybody can become a real estate investor. And we've made it to where if you're buying on a regular basis or you're building a portfolio, that we can certainly service this for many loans. So the AM Student Plus, certainly there's a lot of, especially if you talk about New York, Alistair had mentioned a couple of fantastic schools there. You can, if you want to buy a property for your child while he or she is attending school, you can qualify based on what would be the rental income of the property, but your child will actually be living there. It's a fantastic way to help maybe build your child's US credit history, or to also be able to buy a property where it's not qualifying on your own personal income that you're earning overseas. This loan program has a minimum loan amount of $150,000 all the way up to $3 million and qualifies on the same as the other loan program based on the cash flow of the property and not the personal income. So the AM Investor Plus. So say you're buying a property that may not debt service as you would need, meaning that the cash flow of the property may not right now reach the amount to pay if you need the highest loan to value. We have a program, again, that does not require you to submit your tax returns or your end of year statement in your home country, but it's a very simplified process to where we request a letter from your employer, if you're employed, if you're self-employed, from your accountant, and it's very simple. It states the current 2 years of income and your current year to date. Once we have that, we can qualify it just as if you submit your tax returns. Super easy way to qualify, and it allows you to maybe get a little bit more loan to value in the event that the property doesn't cash flow as much as we would like. You can get up to 75% financing, and both foreign nationals and US expats can qualify. This works on a debt to income ratio, very similar to how it would work basically in your home country. We have a debt to income ratio of 43%, which means that your debt for the US has to be less than 43% if you have a personal gross income in your home country of $10,000 and you have a mortgage payment, insurance, and taxes of $4,300, the loan or below, the loan would qualify. If you're a US expat, and we see this all the time, it's probably about 30% of our business, where there are US expats that have gone either to their bank that they had banked with over the years or to one of the major US banks. They go halfway through the process, and then the bank tells them, oh, I'm sorry, but you're earning foreign earned income. You're no longer allowed to apply for a loan, or we can no longer approve a loan. This causes many issues. Because of this, we have created a very specific loan program only for US expats. This has the same rates, the same terms, and the same programs that you would be able to get if you were living and working in the US and walking into your local bank. The only thing that we require is 2 years of your US tax returns. We do not need a W-2. You must remain stable with your US credit. It says on here 680, but now we can go as low as 640. But the most important thing is when it comes to rates and terms, it's exactly like you would get if you were to go to one of the big banks. Again, this works on a debt to income ratio. So we are at 43% and below, which is very standard. So we work with a lot of private banks. It's very common that high net worth individuals have very complicated tax returns, perhaps multiple jurisdictions, various write-offs. They may not show exactly what their debt servicing ability is. For this, we have a fantastic program that qualifies the borrower on their liquid portfolio. When I say liquid portfolio, I mean stocks, bonds, cash in the bank. If you have that, what we're going to do is look at a 2-month average. There is no encumbrance on this on your portfolio, on your cash or whatever it may be. This is merely used to qualify the loan. So as an example, if you have a $5 million liquid portfolio, again, stocks, bonds, cash, whatever it may be, we're going to average that over the fixed term of the loan. So in this case, we're going to do a 5-year fixed, 30-year amortization. So 60 months divided by $5 million gives you $83,000 a month approximately. So as long as your mortgage payment is at that amount or below, the loan is going to qualify. It's a very simple way if you have the ability to go off of this loan program, either for yourselves or for your clients. So that was our presentation on our loan programs. These are our in-house loan programs. We are a direct lender in the US, but we're also a super broker, which gives us a very unique advantage that if we cannot place the loan with our in-house loan programs, then we will look with our over 150 lender relationships, not only in the US, but globally. This gives us a unique advantage, and this is what America Mortgages is, the industry leader when it comes to non-resident and foreign national lending. So with that said, Alistair, please join us back. We will be doing the question and answer session. It looks like we've already have quite a few questions lined up. Let me go through it. So how we'll do this, I will read the questions. If it's relevant to you, I'll ask you to answer. If it's something that I can answer, then I'll take it myself. So on the first question, do you only manage properties in New York or in any other states?
Primarily
Alistair.
New York, but we also, other states would be New Jersey and Florida. So really those three are our key areas of operation. It's not to say that we haven't managed properties in other locations before, like we have in Chicago, but we tend to focus and tend to be more expert in New York, New Jersey, and Florida.
Next question. What is the rental market in New York? Now that's a very good question.
Well, I guess the flippant reply would be, I hope I'd answered that a little bit in my presentation a little bit earlier. But no, I think just to reiterate some of the points that I made, I think it's a robust and strong rental market. 70% of people that live rent. So there's always going to be a high demand in New York for rental property. If you have a good property in a good location that's kept in good condition, then there will always be tenants that are interested in that, alongside the fact that, is there a building that has amenities as well? So I would, without wanting to sound too repetitive, answer that sort of succinctly by saying I think it's a strong and robust market, a safe and secure one.
I think you are correct. Okay, next question. What about capital growth, or I'm assuming capital appreciation? I think that's something you can probably answer better than me.
Well, historically, if we go back over the years, let's say 25 years ago, I think the average price per square foot for a condo in Manhattan was probably about $500. In 99, there was good growth till the second half of 2001. 9/11 sort of slowed things a little bit. Go forward to a couple of years, 2013, there was good growth again, right the way up to the Lehman's incident in 2008. I think by that time, pricing had grown to about $1,300 a square foot. It dipped after that, as I suspect many people are aware, and it perhaps took until about 2014 for prices to recover, and from 14 up to 2020 there was good appreciation again, where pricing got to and just above about $2,000 a square foot. It then dipped a little bit in COVID. It's increased a little bit, straight after the decrease, so it went down and up relatively quickly back to a sort of a similar, slightly higher level. Then higher interest rates have been prevalent for the last 18 months or so, and that has led the market in terms of capital appreciation to being fairly static. I suspect now we've cleared the US election, and with interest rates starting to tick down, we will hopefully see capital growth again, as has been the case if we look back to 1999 right the way through till 2019 and 20. So yes, there should be good appreciation in the years to come if it mirrors the growth levels between 1999 and 2019. So hopefully that helps answer that one, Rob.
Yeah, and I think just to add to that, I think New York, I mean, the US in general, but New York specifically, is just very resilient. I mean, look at what happened with COVID. Yeah, there was this massive panic, but it's come back more robust and stronger than it's been, and from my understanding, in decades. So
no, absolutely.
Next question.
I mean, I was going to say, we didn't lose tenants in COVID. We did a little bit of light renegotiation on a temporary basis with some tenants that were in distress, but really about, where are we now, late 24, by 3 years back, late 21, the market really came back, and rents have increased quite substantially over the last 3 years.
Next question. Hi, would you help in finding tenants for us?
Yes, absolutely. That's very much part of what we do, and it's a key part of our task, because the sooner that we can find a well-qualified tenant for you, the sooner you start earning income and the better your return on investment. So yes, absolutely.
Next question. Hi, Alistair. How frequently do you conduct routine site visits for the properties you manage?
I'll answer that in two parts, if I may. So I'll give the example of a joint client of my company in Savills in Singapore, who's just in the process of purchasing, and has purchased at 720 West End, the property that we just discussed. So during the phase of first buying to becoming the owner, we will visit, several times to check on progress of the build, take photos, share those with the owner, so the owner can see that how that property is coming along. Then prior to completion, we will go and do the snag list, the pre-inspection walkthrough, and make sure that is all taken care of. Then the second part to the answer is, once a property completes, we would go and visit that 1 to 2 times per year to chat with the tenant, make sure they're happy, take photos of the owner to assure them that their property is being kept in good condition. I find going more than twice a year is perhaps in a slight invasion of the tenant's privacy. I think tenants are generally more than happy with 1 to 2 visits a year, and I've always found over the years that's the right balance in terms of going in and undertaking those visual and photographic inspections. And owners, on the whole, have been more than happy with updates and photos 1 to 2 times per year. So hopefully that answers that one.
Yeah, and I think too, you had talked about this during your presentation. Proper screening of the clients and making sure that these are the type of tenants that you want really doesn't, you're not really needing to go and inspect the property once a year or whatever it may be, because you know that these people have a track record and a history of being good tenants.
Yeah, absolutely. We will have more than likely met them during the leasing phase as well. So there is already that relationship with them, helping them with all of the myriad of forms that needs to be completed and filed with the building. So yeah, absolutely important to have a good relationship with the tenant, and likewise, I enjoy going and visiting the properties once a year, but I don't always find it makes sense to tread on their toes too much.
I absolutely agree. So next question. Hi, Robert. What is your advice? Should we wait for interest rates to drop given the potential upcoming rate cut? Fantastic question. Something that we get often. I think with the current, now that the election is over and Trump is going to be the next president, just historically what he had done in the past was, lowering interest rates, reducing, regulatory barriers. So I think all of the owner-occupied property owners that have been sitting on these low interest rates and not jumping into the market, once interest rates drop, they're going to flood back into the market. I truly believe that. So I think if you're on the fence about buying now or waiting for the interest rates to drop, remember, you can always refinance a property, but you're not always going to be able to be still in a buyer's market. As soon as it goes back to a seller's market and everybody is flowing in, you're going to be paying 10% over just to get the property. So my advice certainly is buy now, refinance later. Alistair, I don't know if you have anything you want to add on that.
I would echo what you've said there, Rob. I mean, with the US election, my fear on this call was that we still wouldn't know. It would be rumbling on. There might be court cases going on. There seems to be a clear winner, and he has a background in real estate, so I think he won't impose anything that would hurt the market. He's always been a proponent of lower interest rates. Lower interest rates have already started to kick in the US as they have in Europe. So I do very much see those interest rates coming down and more people entering the market. And that, I think, will put pressure on pricing in New York, which has been pretty static for the last couple of years. So yes, it sounds good to wait for the absolute lowest interest rates to get into the market, but by that time, sometimes the best buying opportunities may have come and gone.
I absolutely agree. And I think it's also, assume that if you buy now and the market heats up, you're going to get some immediate equity in the property that may have, take you years to develop. You could almost get it overnight. But anyway, we shall see. Next question. Thank you for your webinar. I work with high net worth individuals and families based in Africa. Can a bespoke New York international property investment vehicle company be designed and managed for high net worth families? All form of residence advantages along with these properties investments. I'm assuming it's talking about the structure for the property management. I'll just kind of touch a little bit on the mortgage. For the mortgages, you can, whether you're a high net worth individual or just a regular property investor, obtain a mortgage in an entity. There still needs to be a borrower or a UBO for the loan, but the structure can be held. And what is very common is a US LLC. And there's a variety of reasons why they do this to protect their, it basically stops at the property in case there was some sort of incident at the property where the owner would get sued. And I don't know if you want to touch on this when it comes to property management. I'm sure it's pretty straightforward.
I mean, yes. I mean, we have clients that own in their own names, clients that own via LLCs, and clients that own via sort of even Cayman Islands SPVs and things like that. For this particular question, it sort of cries out that needs an LLC structure set up, and that is something that an attorney in New York, one I work with, I would suggest bringing on board and helping structure that correctly, because it may be that you want to have a master LLC and then properties owned in individual LLCs or different family members owning them in different LLCs. But there's definitely a way to do that, and that would also be a benefit for estate tax and things like that going forward. Danger is we could get into quite a long-winded technical answer to this question, but I think in reading it, the short answer is yes, an LLC type of structure would work well for something like that, something like this, and it's becoming a more and more popular way for people to buy and own their property. In terms of, I'm seeing more buyers over the last few years looking at buying through an LLC than necessarily holding it in their own names because of the ease being able to set up an LLC, and as you quite rightly say, Rob, the ease of being able to finance through an LLC, which perhaps wasn't always the case going back 10 years ago when it came to financing. Lenders really wanted it always to be in the individual's name.
Yeah, I agree. Matter of fact, we prefer if it's in an LLC, but you can certainly finance both ways. Next question, what the average mortgage rate for a foreign buyer? Very good question. And as rates do change, I think the easiest way to explain it is a foreign buyer, or even if you own real estate and you want to refinance, is going to pay about 1% higher than what a U.S. resident with excellent credit would pay. So the difference is very slight. The LTV is reduced by 5%. I think right now we're looking at rates anywhere from the high 6s to mid 7s. Next question, how do you think interest rates will change moving forward? I wish I knew. I do feel, and as we just discussed, Alistair, I think the president-elect Trump is very pro real estate. I think he's very pro low interest rates. So in our opinion, I do think interest rates will decrease. I think the next Fed announcement that's coming up, I believe they're talking about decreasing by another half. So let's knock on wood and hope it certainly gets better. Next question. I'm a U.S. citizen living overseas with a pretty much non-existent U.S. credit. Which mortgage program applies to me? U.S. expat or foreign investor? Fantastic question. We see these situations often. Expats that have lived abroad for many, many years, and they no longer maintain a U.S. credit profile. What makes it very unique as a U.S. expat is you'll qualify as a foreign national. If you have no U.S. credit, we'll qualify you as a non-U.S. resident. But after a couple years, normally it's 2 years, you will start establishing or reestablishing your U.S. credit, and then we can take you out into a proper expat loan, which is about a 1% better rate. Next question, what is the current 30-year fixed rate? Again, it really ranges with us on everything from loan to value to whether you're foreign national or expat, but I think it's going to be anywhere from 6% up. What are the typical exit costs, capital gains, broker fees, etc.? So you should really discuss this with a tax advisor. There are a lot of benefits that the U.S. offers that many countries do not, such as 1031 exchanges, where if you do sell a property, you're not paying any capital gains tax at that point, as long as the proceeds are used to buy, I believe it's either a like or a more expensive property. For us, when it comes to broker fees, we charge, which is very industry standard, we charge 2% of the loan amount. It's a 1% fee, it's a one-time fee, and it's very, very standard in the US. Next question. Good afternoon. Is it possible to qualify a mortgage on an off-plan opportunity like the ones that you used in the example? Absolutely. So what we would do in this case, and we work a lot with, and I know Alistair does as well, with Savills. Savills, especially the Singapore office, fantastic company to work with, very easy, a lot of great products, especially in New York. We would issue you a pre-approval letter. Once you have that letter, then you can use that to put the offer in for the property. Now, the little bit of the tricky part is when this property is going to be completed, because we cannot lock the interest rate for a very long period of time. That is, a little bit questionable. But again, if we're looking at the way things are flowing and trending, likely you would probably not want to lock, as interest rates likely will go down. So again, to answer that question, we can absolutely get you pre-approved for the property that Alistair or other properties. Next question. If I bought a property, but I already own in Connecticut, can I buy now, pre-build, and take advantage of a 1031 exchange when I sell my Connecticut property? Alistair?
Yes, I spotted there's a few questions from Gregory who a couple of minutes ago has posted that he might not actually be online anymore. So I can try and answer these questions via email if one of your colleagues can share his email details with me. If he is still on, I would just say yes, 1031 is possible. The key thing is to be aware of the rules relating to it in terms of if you sell your property in Connecticut, you have to complete on the purchase of a new property within 180 days, and the new property has to be either at the same price or higher than the property you've just sold. So that is the sort of the shorter answer to that yes, it is possible, but just be aware of the rules and we can help guide you through those. But again, I'm not entirely sure if Gregory's still online.
Let me tell you if Gregory is still online. He is not. So we can email him the answers. This will all be recorded. So
yeah, and there's a few that he's asked, so I'll try and pick them all up.
Yeah, certainly. Okay, so we'll skip those and we'll go to Rodney's question. Do banks or lender apply fees and charges for refinancing? If so, approximately how much? Very good question. Certainly, there are fees. On any real estate transaction, there are fees that are very specific, very static, things that cannot be changed, but it's things that everybody pays. You're going to pay for obviously the appraisal. You're going to pay for taxes, insurance, escrow fees. Now, if you were to look at it and average it over what an average purchase price of a property, you're probably looking at anywhere from 3% or so of the closing costs. Oh, so it looks like Gregory said he has to leave, but that was the final question. So, Alistair, thank you. I don't know if you have any parting or closing words.
Well, firstly, to say thank you very much to yourselves for hosting and to everybody for listening and for their questions. And secondly, just to say that I will be over in Asia again in January, definitely in Singapore and Hong Kong, possibly other countries as well, meeting with existing clients to discuss their properties, but also very happy to meet with anyone that would like to have a sit down and a chat about New York, about property management, about the market, or anything like that. So just thought I should put that out there to let people know. And if they're interested, please, by all means, drop me an email. I hope kept it informative, not too long-winded. Yeah, thank you very much again.
No, it was fantastic. Thank you. Always we try to get experts in every field every time we have these webinars. And I think, what you filled in has been I guess, something that people ask all the time. So it was absolutely fantastic. We really appreciate your time. And certainly we appreciate everybody's time that, joined the webinar and that had stayed on the webinar for the entire process. We will be sending out this recording once it goes through editing, probably in a week's time. So you will be able to revisit this. And of course, you can find it on our social media and all of the past webinars also on our YouTube channel. So, Alistair, thank you again, everybody. I really appreciate your time. Thank you very much. And we look forward to working with you. Take care.